And joining us now here on the program as we look big picture at what's going on in the markets. Quarter wheat have been disappointing here as of late. Soybeans, we're going to talk about some of the tightness in that market and the upcoming expansion in soy crush capacity and more. Those are just a few of the topics we're going to focus on here today with our guest, Ed Usset. He's with the Department of Applied Economics at the University of Minnesota, extension professor. And Ed, it is great to talk with you again. How are you, sir?
I'm doing great. Thank you for having me back, Jesse.
Well, we do appreciate the time and happy to be able to get you back on the show before school really ramps back up there at the University of Minnesota. And thinking about how things are going so far this summer, crop conditions. You and I were talking about that just briefly before we went on the air here. Uh, your neck of the woods there in Minnesota. I know you mentioned to me kind of a mixed bag so far this growing season, Ed.
Yeah, we've got our good to excellent ratings on corn and soybeans have been just under 50%. Not very impressive. A mixed bag. I've talked to people in our state who have a wonderful crop coming and other people who don't. It's not going to be a record setting year here in Minnesota, but of course, I always caution people that you shouldn't judge the entire U.S. crop based on your own backyard.
Yeah, you shouldn't have that backyarditis, so to
Right.
speak. I know some
Right.
folks like to use that term for sure. Well, as you think about that and not having backyarditis, obviously there are some areas of the Corn Belt that are doing pretty good. Others are kind of the same as Minnesota. Things are baking under some heat right now and more. But I look at these markets, thinking especially corn and wheat, and it's kind of been disappointing here as of late. We had that recent rally fall apart and got down to some lower support levels here in both corn and wheat. And I know some of that's kind of tied to a poor demand picture, isn't it?
Yeah, it is. It's both a good crop. I don't know if it's going to be a great crop, but a good crop coming and poor demand. I'm noticing that the DEES 23 contract is, as we speak, trading at about 476. That's its lowest level in almost 2 years for that particular contract. Now, these contracts trade for 4 years,
Mm-hmm.
but yeah, we were well over $6 for a period with this contract. Here we are at 476, and boy, I hate to say it, but I suppose 450 is a possibility if this crop is developing well. And the wheat market, I used to be a spring wheat buyer for flour mills, and wheat is my baby. That's the one I follow closely, and the spring wheat market has been just crazy. Over the last 6 months, that market has had, over a 6 month period, five separate crashes and recoveries of 10% or more in the price. And we're in the process of our fifth crash, and I believe we're at life of contract lows or awfully close to it, I should say, right now.
Well, and thinking about both of those markets, you mentioned the wild volatility that we've seen, and I have to think with the demand picture being the way it is, Ed, it's probably going to take lower prices to maybe spur some demand in corn and wheat here. Would you
Mhm.
agree or not?
Wheat and corn, a similar story there. We're watching events, terrible events, a war in Ukraine and Russia, and particularly Ukraine, the breadbasket of Europe, and and we're watching this unfold. Russia went and destroyed some of the export capabilities here a month or 6 weeks ago, bombed the facilities themselves. That's no small deal in that if the war ended tomorrow, Ukraine is still not back in this for a while. It takes a while to rebuild those facilities. But that said, our own market has been anticipating, boy, there's troubles over there. They got to come for our wheat. We're headed for a 50-year low in wheat exports. It's they got to come, but they're not quite coming for our wheat. So
Yeah.
it's trouble.
Well, and I know a part of that is Russia's got a lot of cheap wheat that they keep dumping on that world market. And I mean, you see that versus, the US prices, and there's a bit of a wider discrepancy there than maybe on the corn side with the US versus Brazilian prices, et cetera. So it feels like there's a bigger gap to try and close on the wheat market versus corn
Yeah,
globally.
yeah, yeah, there is.
Well, thinking about this as well, looking at corn and wheat obviously have been a bit disappointing. Soybeans, on the other hand, though, have been a bit better, tighter balance sheet there, Ed. And obviously, we have some different things in front of us too, with soy crush capacity expanding and more. And we can talk about that in a second. But just the soybean market in general feels like tighter fundamentals are helping keep that market a bit more supported.
Changed dramatically with that June 30th acreage report that surprised everyone and added a lot of corn acres, took away a lot of soybean acres. And I'll be honest, Jesse, I don't know anyone who was expecting that unexpected move. And the soybean market really hasn't looked back since. It's been firm, while corn and wheat are seeking levels they haven't seen in a couple of years. The soybean market is hanging in there pretty good.
Well, and thinking about the expansion of soy crush capacity, Ed, I know that's a topic you've been following closely, and it's something that I think is very interesting. We've been hearing a lot about this now for the last couple of years. We've been seeing more and more of these plants coming online or being built or being announced, and it still feels like we're kind of at first base in a way, if we want to look at it that way, Ed. We're kind of rounding first, headed for second here when it comes to soy crush capacity.
Well, I've been tracking this just because it's so daggone interesting, and I think it's going to impact grain markets, all of them, not just soybeans, all grain markets, over the next 3 4 years. I will tell you that in a 15-month period, starting in 2022, going through 2023, I counted 16 announced expansions or that could be either expansions of existing capacity or brand new facilities, greenfield facilities, 16 of them on the docket between now and 2026, really 2026. So the next 4 years. I talked about that, by the way, that would expand soy crush capacity by 25% if it all came to be.
Mhm.
Now, I first talked about this a few months back at a big conference, and I made this, and I expressed this 16 expansions, 25% increase in capacity. And then after my talk, I went on to this conference floor and I'm pulled aside by a gentleman who works on a state soybean board. I'm not going to name names or anything. And he pulls me aside and he says, Ed, you're wrong about the expansion. Good grief, I'm wrong. What did I get wrong? He said, there are not 16 expansions coming, there are 23. And it'll expand production, soy crushing capacity, not by 25%, but by 33%. Well, I'm going to stick with the 16 that I know of and the
Mhm.
25% expansion. And here's my thought on this. And it's still on shaky ground. However, I say shaky ground. It's a lot about the mandates on renewable diesel and
Mhm.
tax credits at the state, federal level, and the price of oil. Is it going to be $80 a barrel or $100 or 120? All these factors come in. But I will say this, I've been tracking crushing margins, and I track the board crushing margin. And I want your listeners to be clear on something. A crushing margin is not a profit margin, it's a gross margin out of which you pay all the bills, and what's left is
Mhm.
profitability. But the crushing margin on the board, that is, you take a look at November soybeans, December oil, December meal, you can calculate these things. It's currently about $2 a bushel. It's currently 3 times the level enjoyed for about a 25-year period from 1990 through 2015.
Mm-hmm.
The last 5, 6 years, that crushing margin has doubled or more. And when you've got good margins like that, Jesse, you expand. So this is something. Will it impact the soybean market in the next 6 months or year? Probably not. We got to get this capacity up and running. But if that capacity, if it comes through as announced, we're going to need more soybeans. And to get more soybeans, we're going to need more acres of soybeans. That means less acres of, you fill in the blank,
Mm-hmm.
wheat, barley, cotton. It's going to upset all the markets. So it has the potential to put a very favorable spin on grain prices over the next 2 to 4 years.
Fascinating thoughts and fascinating work you've done on soy crush expansion, Ed. It's something that I think a lot of us are curious to watch as all those things unfold that you mentioned. One follow up I have for you on that, just your thoughts here. We've seen China go more to Brazil for soybeans and Argentina for soybeans. So, could we see soy crush expansion possibly be a replacement for some of the Chinese demand or an addition to some of that remaining Chinese demand for U.S. soybeans? What do you think about that?
My guess is a little of both. Yes, I mean I'm not. We're all watching the trend, and China is making a concerted effort to take more soybeans out of South America. And yeah, that could be where more of the soybeans come for renewable diesel with just lower exports. But the
Mhm.
market will determine that. We won't. It will not be an edict from above. It'll be market forces that drive that.
Well, we do appreciate the time and the insight, and we'll look forward to getting you back on the program again real soon. Ed Usset with the University of Minnesota. Thanks so much for joining us here today. Have a great one. We'll talk to you soon.
Thank you, Jesse.